Hello everyone, and welcome to TRI, Third Realm Inc. I would like to give you an example as to how you can strategically manage your trades and manage them with so much confidence that nothing will stop you, because you will know that you know how the market moves. You will have total confidence as to when to do business with the market, when to get in on a trade, when to exit a trade, etc. This is June, and it is June 24th, 2010. Now, at TRI, you are going to develop precognitive skills. And if you already have these skills, that is absolutely wonderful. Then, using the systematic movements, the predictable systematic movements that the market offers you, you will be able to be very, very profitable in the market. Now, the stock market does have predictable systematic movements. And these consist of three elements: percentage, graphics, which is the patterns, and then the display of power of direction. And what I like to do with this video is show you an example. About 4 days ago, June 20th, at 7 a.m., right around 7 a.m., the 10-year note, the 10-year U.S. Treasury note, was here. And here, I took this long. And what I'd like to do is show you the systematic system that led me to take this trade. Now, here is the same location, Now, the elements that we use, let me enlarge this here for you. This is what we call the power direction. This is a MACD. Now, MACD is an indicator that so many people use it, and it's a fact that very few really understand how powerful this indicator is. Now, these MACDs, these little BBs, that's the MACDs, they are overlaid with Bollinger Bands. This here is a 1597 tick chart. And this here is a 4181 tick chart. Same location. So, why go long here? We do have a gap right here. And you are very much aware that the market's tendency is to close that gap. Sooner or later, it's going to close that gap. Sooner or later, the market was over here, dropped down to here, no bars in between. Sooner or later, there'll be bars going in the opposite direction to close this area. Now, this is something that the market does consistently. Now, it doesn't mean you'll do it on the same day, but you will go back and close that gap. Now, we can time it as to when it's going to close that gap. To a fantastic degree of accuracy, we can do that. Now, so here is the 20th. Now, back on the 16th, I'm 16th. The 13th, we were in the same area. So we have here a double bottom. What the market calls a double bottom. Now, the terminology I use, it is very It's quite different. It means the same thing, but I prefer to use a different language when I'm looking at the market and assessing the market, because a different language creates a different feeling, a different emotion. And as I shared with you a little bit earlier, I showed you that we have a systematic system that it consists of three elements: percentage, layout, display of power, direction. There's one more element, and that's the element of mind over matter. And that's most people that trade the market understand these three elements. They can look at the market, they can look at the indicators, if they're using moving averages or whatever they're using, and they understand what they mean. However, understanding and sitting in front of the market and dictating what the market is going to do before it does is one thing. However, when one is faced with their cash account and now they're going to put their money out there, that's a whole different thing. That's the fourth element, the mind over matter. The psychology behind this is the fourth element is, to me, is the most important of all of them. Anybody can understand percentage, and anyone can understand a pattern, and anyone can recognize a pattern. However, the ability to stay consistent and to act based on what these tools are telling them, comparing to have all these fears consume them: the fear of losing money, the greed factor, the desperation factor, the chasing factor. To be able to trade neutral and trade solely for the indicators, that's an element on itself. It's essential one, and that's one of the things that TRI really gets you to realize and helps you implement this element, the mind over matter. That's what I call the mind over matter. So the language I use is of extreme value, or extreme valuable for an individual that is very that trades with a lot of emotion, and recognizes that the feelings and the thoughts that goes through their minds actually hinders them. It causes them to lose money when they know better. They know better. They know what to do. Yet those thoughts, the way the brain just races with all kinds of things, and that has nothing to do with the technicals, costs these individuals thousands of dollars each day. Okay, so we have here a gap. So I'm showing you the different reasons as to why I would take action here. And by the way, in the TRI, when we take action, we don't expose ourselves. We don't expose ourselves to financial losses. We just don't do that. All right. There is always the possibility of you getting into a trade and the market takes off against you. But you see, this is an area that would be the most. Took that trade right about over here. That this would be the most that we would allow the market to come against us. Period. Now I trade daily with a TF. All I use there is 5 ticks. This is the 10-year note, and this is a larger time frame, so I will need to, because of the area, because of the size of the bars, one has to use a little bit more. Alright, so one of the reasons to go long here: double bottom, one reason. The gap, 2 reasons. Another reason that we have here is the shape of these 2 bars. Another reason that we have is the separation between the BB and the Bollinger Band. The separation between here and here, this means that the market is trying to lose its trend down. It's desired to go down. This starts to show us that. And then when he gets underneath, that's a place. That's a place. So you have the area, double bottom. MACDs are separated. So the power of direction here, it's ready to snap back up. And you time this always with an area. We have the bar set up. And we had the gap. Now, as the market plus, we have, let me draw this for you here. A potential shoulder there. Potential head here.